Looks like we've got enough people here to go on. So I just want to share my screen. All of you should now be seeing a kind of a very quickly drawn up PowerPoint.
Yes.
Okay. Yeah. Okay. So the first thing to know is that in 2008, the legislation changed a little bit. So that's why there's two slides. The one is how it used to look, and then the next slide would show how it currently looks. Okay. So what happened first is they passed the SAQA Act of 1995. This established the South African Qualifications Authority as a body, and this body had two separate functions. The one function was responsible for creating qualifications, and they created the qualifications through the national standards bodies, and then the national standards bodies appointed SGBs, standards generating bodies. Then they also established ETQAs, Education Training Quality Assurance Bodies. So QA in our context stands for Quality Assurance. And then these ETQAs were responsible for establishing training providers. So as you can see, the SAQA Act was done quite some time ago, but for a while, nothing was happening. And that was because there wasn't any specific money for it. So what then happened is in 1998, they passed the Skills Development Act. And the Skills Development Act established, so, you know, like the CAF-CETA, MIT CETA, and all of those. They were established via that piece of legislation. So this is then important to know because SAQA doesn't have authority over the CETAs. SAQA doesn't appoint the CETA ETQAs and stuff like that. That is described in the Skills Development Act and is usually then the CETA CEOs are then appointed by various ministers. It used to be the Minister of Labor, now it is the Minister of Higher Education. But SAQA then devolved some of its powers. I should maybe just bring it like that. So what SAQA then did is it gave the power to be an ETQA to each of the CETAs. So then you ended up with two types of ETQAs. You had CETA ETQAs and non-CETA ETQAs. So the non-CETA ETQAs in this period were things like Umalusi, the South African Nursing Board, all of the kind of statutory bodies that existed for ensuring quality in education. But the CETA ETQAs were then started new. One of the biggest benefits to going with a CETA ETQA is you don't have to pay them to register, you don't have to pay them to accredit or doing any of the steps because the CETA was then funded through the Skills Development Levy Act that was published in 1999. So the big difference between a tax and a levy. So here is now a little, here is now an example of money. What's the difference between a levy and a tax? Very briefly. Let's make it green for money. A levy gets added on top. Whereas a tax gets subtracted. Okay, so an example of this is like you get a pay slip from a company. On that pay slip, you're going to see there's a deduction for pay as you earn for UIF. So those are taxes. One of the things that this skills development levy did is it placed a 1% levy on all payroll. So let's say, for example, a company this company paid 100 rands in payroll. I'm just using small numbers to keep it easier for myself. So what would then happen is the company would have to pay a skills development levy of 1%. So it would then pay R1 extra to over to SARS. And this money would then go into the skills development fund. Now, the skills development fund money goes into various different places, and various bits get kept behind. But what then happens is 80 cents, around 80 cents of that money that was collected would then go to the CETA. But the CETA can't use all 80 cents of that money. It can only use a portion of that money for itself. So of that, now we turn this 80 into 100% again. We're just going to turn it into 100% again. Of that 80 cents, which is now 100%, the CETA could only use about 20% for its own internal functions. That's now its staff, its buildings, etc., etc. Now, the remaining 80% of the money gets split between what is known as mandatory and discretionary. So the mandatory funds have to go back to the company that paid it in. It goes back to that company. The discretionary money, the CETA can then spend on projects. Okay, so what must the company then do to get the mandatory funds back? That mandatory funds, they need to submit a WSP and an ATR. And when, so you know at the CETAs, on the 30th of April, they kind of have like the funding requests and so on must be in. That's also when these WSPs, the workplace skills plans, and the annual training reports have to be in. So the workplace skills plan says what is the company planning on training in the next coming year, and the ATR is the annual training report of what they have done in the past. So let's take an example of one of the largest organizations in your field. So the SABC. I'm not entirely sure to who the SABC are paying their levy. It used to be the MAP CETA. The MAP CETA was then replaced by the MICT CETA. And so I'm thinking that the SABC put their skills development levy over to MICTS CETA. So what would then happen is SARS would keep a portion of it. Then the remainder would go over to the CETA. The CETA gets 20% of that. The mandatory funds they would pay back for to SABC if the SABC has submitted a WSP and an annual training report. And then the CETA has got the rest of the funds, the discretionary funds, to use on projects. So if you have learners on a learnership, then those would be usually people who are funded via this. Right, I don't see Mpo in the group at the moment. Okay, I'll just explain to her at another time then. So this is then how the model was set up. So this is under the 1995 SAQA Act. So what then happened in 2008 is they replaced the SAQA Act with the NQF Act of 2008. So where it used to be that SAQA had the powers over the ETQAs and the qualifications, SAQA now oversees the QCHE, Umalusi, and the QCTO. And these different bodies now each have a qualifications department, an ETQA department. So that used to be a centralized function. Now it's a decentralized function. The CETA ETQAs now all fall under the QCTO, the Quality Council for Trades and Occupations. But this changing of the NQF Act didn't change any of this bit. This bit still remains completely the same. So what we then have as a separate then field is SARS then also has various incentives. So the incentives that they have there, the one is the learnership incentive. And the other one is the skills development incentive. So on the learnership side, and like I say, the precise numbers differ from year to year. How it would work is if somebody successfully finished a learnership, then you can get a tax credit of 75,000 rands. Now, what's important to know is that a tax credit isn't money that you get given, but it is money that you can keep. So let's say I owed SARS 75,000 rands in tax. If I had one person who finished a learnership, then I don't have to give them that money. And if I've already given them that money, they should give me that money back. So that's then how on this side it would work. It works then as a rebate. Okay, and then in terms of, and this then only works if it's a registered learnerships. You get two types of learnerships. You get CETA funded learnerships, which get funded from the discretionary. And then you get company funded learnerships. So a company can also run its own learnerships. A company can also run its own learnerships on employed learners. So you might have heard of 18.1 and 18.2 learners. So that 18.1 and 18.2 reference paragraphs in the Skills Development Act, because you know legislation, they number the different sections. So 18.1 and 18.2 is where the Skills Development Act talks about employed and unemployed learners on learnerships. Because it's important to know that a person on a learnership is an employee, but they're a limited type of employment. Because you know, on a standard thing is if you pay somebody to work for you more than 18 hours a month, SARS considers them an employee of yours, and then you've got to pay as you earn. And people can't, you know, legally work for free. So that's why they had to make a special exemption to the employment legislation to make learnerships work. Okay, and then this company can also claim on, so the company could, as it's mandatory, have self-funded learnerships, or it could be short courses. Because remember, a learnership has to be a full qualification. You can't have somebody do a learnership just on a skills program or a unit standard. They've got to do the full thing. So this next portion, the skills development benefits that SARS is doing, that's what we'll be talking then again on Monday, because I haven't read through that document quite as thoroughly, and I also don't have any material prepared on that currently, because that's really a bit outside of the assessor course. But on Monday, we'll talk specifically about that. And then another piece of legislation that's important there would be Okay, so Mpo, welcome.
Hi, yes. Sorry, man, my internet access is a mess.
Yeah, no, I was thinking something like that. Unfortunately, I only realized that your name wasn't on the screen after I've explained most things. So I'm just quickly going to recap for you.
Okay.
And on Monday, I'm going to just do an additional bit about the new incentives by SARS, the ones that they've introduced over the last couple of years.
Okay.
Okay, so how it works is in 1995, they established the SAQA Act. And this act made SAQA as a statutory body. Now, SAQA had two legs, one leg that deals with qualifications and one leg that dealt with quality assurance. The qualifications leg was responsible for establishing the standards generating bodies that wrote the qualifications. Then on the ETQA side, they had the training providers. So technically training providers and so on could already have existed from 1995, except nothing was happening because there wasn't any money for it. So what then happened is in 1998, they passed the Skills Development Act. And this then established the CETAs. And then SAQA devolved its authority over the ETQAs to the different CETAs. But again, nothing was happening because there wasn't any money. Then they passed the Skills Development Levy Act in 1999. Now, an important difference between a levy and a tax is a levy is something that gets put on top of. A tax is something that gets subtracted off. So let's say this green money was your salary. The company has to pay the skills development levy on top of the money that they pay the employees. But things like the pay as you earn and the UIF are taxes, so they get subtracted from the money. So you'll see that there's a minus in front of the pay as you earn on your, on a pay slip. But you won't see the skills development levy on your pay slip because it gets paid on top. So the skills development levy is 1% of an entire company's payroll for companies above a certain size. So now we've taken a company with a payroll of 100 rands, just to keep it simple so that my maths ability can keep up. So then the company would be paying 1 rand on top of the 100 rands it's already paying. Because what they do is they pool all of the money that went out as remuneration together. So the CEO and the cleaner and everybody's salaries become that 100 rand. Then 1% of that gets added on top of that, and that 1% goes through to SARS. That's then known as the Skills Development Levy. SARS then does two things with the money. Some of the money goes to the National Skills Fund. And then the rest of the money, that would be about 80 cents of the 1 rand, would then go through to the various CETAs. So it's always important that a company that's paying levies is paying its levy to the correct CETA. Otherwise, the CETA doesn't want to give you funds because you're paying through to the wrong one. So of that new 100%, that 80 cents is now the new 100% that goes to the CETA. The CETA can keep 20% to run its own activities. then the remainder of that 100% gets split between the mandatory and the discretionary. Now, the mandatory funds are things that must go back to the company if the company is submitting a WSP and an ATR, so a workplace skills plan and an annual training report. So these reports then have to get sent into the CETA by the 30th of April. So the WSP is then for the training that they would be doing in 2020 and 2021, whereas the annual training report would be for the training they've done in 2020 and 2019. So the one is going forward and the other one is going backwards. So that money has to go back to the company. And that's usually around between 40 to 60% of what they've paid in for the mandatory. Then the discretionary funds is the funds that the CETA can use to run projects. So for example, learnerships and so on, they all come out of the discretionary budget. Then SARS, on the opposite hand, has got other incentives that it also offers. On Monday, I'm going to be talking about and on this side and this side. This can be for short courses or full qualifications. So short courses or full qualifications. And the projects also short courses or full qualifications. Now, the learnership levy only applies on learnerships. And according to legislation, learnerships can only be full qualifications. Now, how it works is SARS offers a rebate of, last time I checked, it was 75,000 Rand. So if my company then had a person that was doing a learnership at my company, and I paid 80,000 Rands in tax, I could get 75,000 Rands of tax back from SARS. But if I only made if I only paid 50,000 Rands worth of tax, I could only claim back 50,000 Rands of tax. I can't get more money than I paid in. And then they've also got in about 2-3 years ago, they passed various youth, legislation encouraging young people to get into market. There's that one where you can claim the salary back that you're paying to people underneath a certain age. There's the one that raises your BE score and your corporate social investments and so on if you're training young people. So that one we'll talk on Monday because I don't have material prepared for that, but I do have material prepared for the others. Okay, so we now have that question by definition, does an educational institution qualify as a company? Yes. So my company is an educational company, but it's also a business. The University of the Witwatersrand is also a company. I'm not quite sure what type of company they are registered in. I think they're registered as a non-profit, but it's still a company. So WITS, of course, would be paying a skills development levy. Now, here's the question to who do you think WITS pays the levy? They pay it through to the ETDP CETA. Likewise, if I was paying a levy, I'd also pay it to the ETDP CETA. Now, if you've got your own training company and you're paying a levy, you would also be paying it to the ETDP CETA because your business would be training, regardless of which field you are training in. So with regards to those other affiliated institutions, they would also be probably registered as separate companies. So yes, those companies could claim for the training that you're offering. If they're sending people to you that are employed by them, they can claim it from their WSP and their ATR. So, because that's the whole reason why they've put this legislation in place, because they wanted companies to train people. Of course, one thing that the CETAs are doing is the CETAs are saying that it must be credit-bearing courses. So if you want your clients to be able to claim back on their WSPs and ATRs, you have to offer accredited training. If your training isn't accredited, the CETAs aren't going to accept them as being legitimate courses. Okay, so okay, we just have another question here quickly. Is there a limit to the number of 75,000 a company can claim for SARS? So if a company trains 1,000 people, is that effectively 75 million in rebates, considering that's the range of tax they pay? Ooh, I'm not entirely sure on the on that, but one of the things that I think is going to stop a company from being able to do that is the learnership has to be funded either by the company or by the CETA itself. So it's going to be very difficult for a company to convince the CETA to spend their entire budget with just one company. Because, you know, the CETA has only got a certain limited amount of learnership. So it's very seldom that you hear about 1,000 people being on a learnership. And when you've got 1,000 people on the learnerships, it's probably going to be spread across several hundred companies. You know, so several hundred different companies are going to be the employer. All right, so this is one thing I just need to make clear. In a learnership contract, there are essentially 4 involved parties. There's the CETA, which is providing the funding. There's the training provider who's giving the classes. There is the company where the learner is working, and then there is the learner themselves. So the learner receives a monthly stipend of around 2,000 to 3,000 rands, depending on the level. That money then comes from the CETA. Then the company doesn't get any direct money for being involved in the learnership. That's why they get the tax rebate and they get the labor of the learner. The training provider gets paid by the CETA for running the course. So for the classes that they're giving and the admin that they're doing. And then the CETA is providing the money. So this is now the case for an unemployed learner. But if the company is taking an employee and putting them on a learnership, they would also have to pay the learner the stipend, and they would have to pay the learner the salary. So that 75,000 is probably not going to be enough to cover that. So one can't really run it, I think, as a exercise to zero out your taxes. But you can get enough money back in order to actually fund your training department. I've actually helped a couple of institutions fund their training providers through the WSPs and the ATRs, and then the rebates on the taxes. So it's one way that one can help a company establish a training branch internal to the company. Okay, so Mpo? Okay, so Mpo dropped out again. I wanted to unmute her. Is there anybody who's got a question now? Let me see. Okay, so I'm just quickly going to unmute you, and then you can ask the question. Yes, Karabu.
Hi, Dirk. Yes, I'm just asking with regards to the point you just raised. There are 4 stakeholders, right?
Yes.
The money would come from CETA and would go to 2 stakeholders, being the training provider and the learner.
Yes.
However, the host benefits from free labor, so-called free labor, as well as rebates. So I'm running an SMME, and I'm in a position to host maybe 2, 3 learners. I've got a capacity to host 3. So how would I then claim as an SMME? Maybe I'm not even contributing to tax because my annual revenues don't amount to the minimum 76,000 rands in profit. So I don't even pay taxes. So how would I then be able to benefit from SARS in that respect?
Okay, so in terms of this legislation that we've talked about, you wouldn't actually be benefiting at all. So your only benefit would be the work that the people are doing.
Free labor.
I think there might be some benefits in terms of the other rebates for SARS. I haven't can't answer that question right now. So ask me the question again on Monday.
Okay. I'll prepare it for you in advance, and then you'll answer it on Monday.
Yes, that's right. So just send me a WhatsApp on Sunday with your question so that we can speak about it on Monday.
All right, I'll do that.
Okay. Mpo, I see you dropped again.
Hi, yes, sorry, my internet is bad.
Yeah, because...
Yes, can I try and answer Karabo's question for him? I think I know.
Okay.
So because he has to be registered with Pay As You Earn, with SARS, in order for you to be able to claim your tax, rather your skills, what is it? Not your SDL, but in order for you to be able to claim back Karabo, you would have to have registered with Pay As You Earn. So you would have to be contributing something to SARS.
Okay.
In order for you to claim.
Okay, for the labor.
So I think that's the first thing. I'm not too sure in terms of you having an SDL. Remember SDL, in order for you to have a SARS SDL reference number or to be registered, you have to be making a certain amount of money.
Okay, I'm just sorry to jump in there. Every company has to have a skills development levy number. You only have to pay skills development levy above a certain size. So tax registration is you are going to have a levy number. You just don't have to pay.
Oh, okay. So that means that...
Wait. Sorry. Go ahead.
No, continue.
Yeah, I was at SARS, I think it was last month, with regards to the SDL. So the first minimum requirement that they mentioned, and which is the main barrier, is that your total payroll, meaning the people you employ, their annual salaries need to amount to 500,000 rands or more. That's the main condition that barred me from even getting a so-called SDL number. So they didn't even want to entertain me because they claimed that if I'm not earning or if I'm not paying my employees, including myself, the value of 500,000 rands or more per annum, I'm ineligible to receive an SDL number.
Okay.
So yeah, that's the information I received.
Yeah, they're supposed to be experts on this, but I'm thinking that person just didn't want to kind of do the necessary effort because all companies actually have to be registered for skills development. Have you ever gotten a tax clearance certificate yet?
Yes.
Okay, because on that tax clearance certificate, it should actually show for you. Because, you know, my own company, I don't pay 500,000 rands in salaries every year, but I am registered for skills development levy. And when you want to accredit as a company, a lot of the SETAs also ask you for the levy number. So I think they just didn't want to put in the effort on that particular instance.
Which branch do you use, Dirk? Maybe we should visit your branch.
Yeah, I use the one here in Pretoria East, but I'll just also have the legislation for you as a reference on Monday.
Okay, that would be great. Thank you. And thanks, Mpo.
Okay, so Mpo again, we've just got 2 minutes left on this session. Did I answer you?
I'm just going to add in. I don't know if I even heard because I was on and off. But I'm just saying, just to add on to what Karab was saying, So I would do research on how to claim rebates and whatever. And I realized that certain SARS branches don't understand. Like I live in the CBD, and if you go to the SARS at Risic Street, they would not be able to assist you with the SARS, with the learnership incentive. They would not be able to assist you with SDL, because people that normally go to those branches are people that are just there to pay tax. So that's why I'm saying certain, even the one in Pretoria CBD,
like income tax.
Yeah, the one in Pretoria CBD don't understand that. That's why I'm saying this. I think your Alberton, I don't know, the one that you go to, Dirk, might be the ones that we have to go to going forward, because I've tried registering my learnership so that I can claim the learnership rebates at the end of the program, and nobody's able to assist me.
So they're going to end the session now, but I'm going to I'll just do some research on how to approach SARS with it, so that I can advise you sometime during next week on how to do it.
All right.
Okay, so thank you then for your sessions today. I'll be uploading this onto the course, and then I want you to please spend the weekend answering as many of those questions as you can, and please send me an email or a WhatsApp if you're struggling to find the answers for one of the questions, or if you need some additional guidance.